It is a pleasure to welcome our financial expert Ms. Amrita today. She is going to share with us her thoughts on the book Behavioral Finance and Wealth Management by Michael Pompian. Amrita, over to you.
It's a wonderful book, Behavioral Finance and Wealth Management. So please know that investors, as investors, you can be adventurous, you can be individual, you can be guardian oriented, you can be celebrity oriented, etc. So let me show you Bailard, Beal and Kaiser model. It is basically types of investors. Investors can be confident, investors can be adventures, can be celebrity oriented, investors can be guardian oriented, investors can be individualistic. Now, the way they have done it is that they have divided these adventurer, celebrity, guardian, and individual basis how confident the investor is in his life, in his financial decisions, or whether he gets nervous. And also categorizing investors as whether they are impulsive action takers, they take an action without thinking, or whether they are careful action takers. So if you are confident, very confident, but quick on action without much thinking, your personality type is that of an adventurer. If you are very action oriented because you don't want to miss where the action is, but you're not that confident, you are easily susceptible to what others have to say. That is why a lot of manipulative brokers can exploit this particular category of investors because they are celebrities. They don't want to miss the action, but they are not very self-motivated or self-sure like adventurers are. If you are confident and very careful and methodical, that means you don't jump to conclusion, jump to actions, you do your own research analysis, but you have a lot of confidence. That's called individualistic. It's a very good trait to have. But the only problem with individualist is that they may take a lot of time towards taking the action, and therefore they might waste a lot of time. But it's a good trait. And a lot of people who are nearing retirement, obviously they are careful with their money, and they may not be that confident, especially with new financial products. So that's called the guardian type. So adventurer, as I've mentioned, the problem with adventurer is that they might take a lot of risk because they are not thinking through. They are confident, but they're impetuous. Celebrity are pretty gullible, and they need to increase their confidence levels. Individualist, very good personality type, but they might take a lot of time towards taking decision. Guardian, obviously, it's because of their life stage. They are very anxious, they are very careful. So it will make sense for them to become a little bit more confident, a little bit more action oriented. But a balanced investor should have all the traits. He should be confident as much as he should be little anxious. He should be action oriented as much as he should be careful. So again, if you know these terms, you can always tell yourself, well, I'm confident, but can I be a little bit anxious also? Well, I'm careful. Can I be a little bit action oriented also, vice versa? So just knowing these personality types is also very important because somewhere psychologically, it will make you a straight arrow person. A straight arrow person has all the 4 attributes. Now, neuroeconomics also a very, very important field. So it is application of brain science and psychology. So brain science, psychology, and economics all mixed together is neuroeconomics. And there are certain neurotransmitters. Neurotransmitters are chemical messengers. They get release triggered in the brain, and they carry chemical messages from one nerve cell to another nerve cell. And dopamine, serotonin are some chemicals or neurotransmitters. Now, what is dopamine? Always remember that dopamine basically is a neurotransmitter. It is a chemical that is associated with pleasurable experience. For example, you get a bonus. You know, it is very good. You feel pleasurable. You feel happy. That's because dopamine is getting released. If you get a loss, you feel very sad. That's because dopamine is not getting released. So dopamine is associated with a pleasurable experience or expectation of a pleasurable experience. It is associated with a pleasure system. So it is in response to a pleasurable experience or expectation of a pleasurable experience. Now, there are a lot of things that I've mentioned. You can read it, but one thing is that proper dopamine release will make you happy and motivated. No dopamine release will make you unhappy and unmotivated. Very high dopamine release is more dangerous than no dopamine release because that will make you very aggressive risk taker. So when you want 1 in a million victory, that is why going to a casino and gambling or investing in some penny stocks, investing in some Ponzi schemes, investing in get rich quick schemes, that is a dopamine rush. excessive dopamine is getting released because you want that thrill, you want that euphoria. Even all substance takers, all drugs, people who take, that's because they want to be high, and that's dopamine surge. But what happens is that all this cocaine and all, they try to mimic your brain's natural dopamine. And at one point in time, it reaches a saturation level. So you need more of that drug to feel high, and your natural dopamine release will come down. So always remember that our lifestyle is important. It's better to meditate, have a good lifestyle, have healthy food, stay away from substances, etc. And also don't get the thrill कि I want to be kaun banega karodpati. One stock I'll buy and it will make me karodpati. It is a dopamine rush. So excessive dopamine will make you get a victory against odds. And whenever you feel an urge to take on, an odds that is objectively being stacked against you, ask yourself if dopamine surge is having an effect. Wanting to win is natural. Wanting to big, really big, excessive risk, ask yourself, it is not realistic. It cannot be satisfied. It is a dopamine rush. So it contributes to overconfidence, optimism bias. So when we are overconfident, when we think everything is rosy and everything is very nice, we are having a dopamine surge in our body. It's always better to be little bit grounded, little bit anxious. That is why I said a good investor is anxious and confident. He's impetuous and careful as well. Serotonin, what is serotonin? Basically is also a neurotransmitter. It gets produced in our digestive tract as much as in our brains. It is also considered as a hormone. Now, when you have proper serotonin, you'll feel happy, nice, etc. But when there is reduction in serotonin, it leads to emotional and behavioral problems like anxiety, depression, impulsiveness, etc. So whenever there is something negative, our serotonin level comes down. So whenever you see a loss in your portfolio and you're panicking, it's not dopamine rush. Dopamine would have come down. Serotonin would have come down. And then you take something erratic, and chance to lose 1 lakh. Now that is an erratic investment strategy. They will take illogical actions to recoup a loss, to overcome the depressed state. And loss aversion bias is actually associated with reduced serotonin levels. So these were the things I wanted to cover more, which was mentioned in Michael Pompian's book called Behavioral Finance and Wealth Management.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.